Hey guys, welcome to another video brought to you by Total Control Traders. Before we get into it, quick reminder that there will be a free giveaway offered on Sunday that's coming up, the 24th, as well as Monday the 25th, for a 7-day free trial to our trading community. And things you can expect from the community based on the last two semi-monthly callouts are about 85% correct callouts. So check it out. Make sure you check it out and join the free trial if you are interested. Alright, let's get right into it. First, SPX. Full bull mode, hey? Look at that. We called the bounce due to lack of bear pressure back here on the 15th, last Friday. Then from there, we had bounced 3.16%. And in the community today, I was mentioning to the team members that we want to keep an eye on this trend line here. This trend line has gone back for quite a long time. If we look on the daily, it began on November 16th, and from here, multiple, we can call this rejection depending on how you draw it. So yeah, multiple rejections here, another rejection here. Actually, let's go to 4 hours, it's a bit more clear. Yeah, so one rejection, two, went over it, bounced, so now it's a support, reject again, and then today, intraday, we witnessed the bounce from it. And now after hours, we have broken down under it. So key trend line to watch, and now we have broken under. The trend for the hourly is now in bear's favor. We can see higher low, lower high, lower low, lower high, low, now making a lower low again. So trend ends in it. The hourly trend is in favor of bears. 4 hours, not a clear lower high yet, but we are seeing somewhat of a pullback. Now here are the key levels that I'm watching. First, previous high, this zone between 38.25 and 38.33 with the 0.382 fib right below it, right at 38.23. First key level to watch, most bull case scenario, we want to be seeing a bounce from here. Second level to watch will be GP after that, and the GP is right about 37.91 to 37.95. And if we look back, it lines up with the support zone. Okay, it's not gonna work. Lines up with those two support zones. Can see the low here and the close here. So that's a key level to watch as well. This one is no longer in play. And this one, the second green bar below, this is the most key level. Previous high, somewhat lining up with previous low. If we lose this level, let's see if we can draw this better. Yeah, that makes more sense. From the close of December 28th, 7 o'clock, to the high, this would be a key zone to watch. If this was lost, we'd be looking down further. Okay, so first level, 0.382, in between the 38.25 to 38.33. As for the NAS, we're currently still on support for bouncing from the 4-hour 8. Target has been reached on 13.374.2, and that's based on this lower low, higher high to this higher low where we bounce from the GP. So first target has been reached, 1-to-1 extension, and now we gotta see what the higher low looks like. I don't imagine this 4-hour 8 to hold. Likely to set a higher low. Let's draw a fib, see what the levels look like. .382 somewhat makes sense. It's just above the previous high. So keep these levels on watch. There's no clear confluence on fib levels yet. Gonna have to pay attention to it. But I imagine this is just gonna be a 4-hour higher low. Next, Dow's. Different story than NAS and SPX. We only broke the previous high very slightly by $8 roughly. At the highest point about 20 some dollars, so less than 1%. We broke the previous high by less than 1%, and now we're seeing a rejection already. So on the Dow is a lot weaker in comparison to NAS and SPX. There is a potential of this wedge forming. We lost it slightly back here, but bounced straight back up. So this wedge is, this rising wedge is still intact. Next, US dollars. Seeing bear reaction, and I am seeing, not on the daily, but on the 4-hour, there is a head and shoulder that's confirmed right now. Trying to find that tool. So this is the left shoulder, this is a head, and this is the right shoulder. Neckline being right here. So we have broken that, and now actually neckline is right here. So now the head and shoulder pattern has confirmed. US dollar is in a downward trend on the 4-hour. Daily needs a lower high soon. We could just drop down further, likely scenario, in order to make the trend reversal. Gold. Interesting. Not seeing a complete inverse to the US dollar. We are bouncing from the daily 8 right now. Weekly trend. Likely higher lows been found. So from here, I would expect we're going to go higher on gold. Next fix, right on the support. Broke down slightly. Still have not broken that 20 level. Remember, this 20 level is a must hold if you are a bull on VIX. But right now, nothing of major concern yet. Yeah. One other thing we noticed today, or I noticed today, the US 10-year to 2-year yield on the daily for the first time since, let's see how long this has been. For the first time since February 2014, we have broken over this resistance zone. And now we have rejected right on the next resistance, right from it. So something notable, if you look at this long-term chart, let's look at the weekly, might be a bit clearer. If you look at this weekly chart, wicked right from this resistance, and now we're closing on the top part of this overall resistance zone. So something notable, If this were to reverse, generally it's a leading indicator of market correction. Just something to keep in mind. But as we can see back here, it is a dragged out leading indication, because when did we go under? 19. Low. Alright, so August we went under 1, and it took all the way till February, which is 4 months, for the pandemic to hit, and that's when this started reversing. So very far leading indicator from experience. Bitcoin, seeing bear follow through on the weekly, and bull flag on the weekly is still intact as we anticipated. On the daily, it was a little bit choppier. We can see it rejected from where we anticipated, then came down, and now we're bouncing from this lower trend line. Decent bear volume. This could drag out for quite a long time. I imagine into next week before we start seeing if there's going to be any reversal. Low bear volume this week comparing to last week. However, market, I don't know about Bitcoin. US market was closed on Monday. Let's see, Monday was, okay, so over the weekend is generally low volume. Nothing notable. Alright, so we could very well see a bounce starting next week. Alright, hottest tickers. First one, Tesla. Weekly is bull, daily is bear. Are we rejecting from the trend line? We have one candle that slightly closed over it. Now this trend line is from the wick from 12th, 9:30, to the wick from 14th, 8:30. We've only closed very slightly over it once, and now we're pinned in between the previous trend line from the wedge as well as this upper trend line. Low volume overall, a clear decrease in volume. Gonna have to see some inaction is gonna present itself very soon. Remember how back here we called that this could very well drag out for a long time, and it seems like it is dragging out for a long time, and we're gonna have to keep an eye on it. Right now, you could draw a new wedge, and this seems to be something that Tesla likes to do. He's gonna have to draw wedges over and over again until one has become extremely clear. So this could be the new wedge that's forming right here right now. Gonna have to see what action it brings us towards this area. Generally, we don't really get to the apex. It's somewhere near the apex that we're gonna start seeing a break. So this one still intact in the sense that we're just gonna draw a trend line over it instead now, because we can see the back test from here. Yeah, this way is a lot easier to see. Next, Apple. Congrats, Apple bulls. Congrats, guys. Sideways action for how long? Well, sideways / consolidation for 14 trading days, so roughly about 3 weeks. And now we are seeing big bull price action with follow through. Look at this. Gap up, run. Gap up, run. And now we're rejecting from this trend line. On increasing bull volume, earnings coming up on next Wednesday, I believe it was. Next Wednesday, yep. And we can see a rejection from this previous trend line. There's a lot of, let me clear this up, guys. Don't need that one. Target's been reached. Wedge is no longer in play. There. Alright, so we can clearly see this trend line form from the beginning of the bounce to the higher low, to another higher low, and we broke under it. And this candle right after we broke under, rejected from it, and now we're seeing a rejection from it again, which lines up with this previous high. So what I would anticipate from here is two scenarios. We're either going to grind up along this trend line, just slowly grind here, or we are going to, oh, my cursor doesn't show up. So that's why some of you guys say it's hard to see my mouse, hey? We're gonna have to look into that after the video today. Anyways, it's either gonna grind up from the trend line here, or we're gonna see a reversal and come back to gap fill here. But if we do see reversal, this is where I would anticipate a bounce. Lines up with right here, almost. Yes, it does. So keep your eyes on it. Daily is a little bit extended. We have a big upper wick. Hope you took profit already. Tomorrow, likely to see either an inside bar or some bear action. Both not too convincing. Towards the end of the day, volume is not that high. However, it is increasing bull volume. We can see that we're just grinding along up here on the RSI. If you're in bull play, use the, I would say actually 30 minute. Yeah, we haven't even touched the hourly 8. Look at this, nowhere near touching the hourly 8. So to make sure you're in, you get decent profit, use the 30-minute 8 as your guide. Next, BABA. So we switched some of the tickers up. BABA, lots of gaps. A mini gap back here on the 14th. Can't tell if there's a gap. High, low. Wow, to the penny, not a gap. We gapped up, came back to fill the gap on the next day. This is amazing. Gapped up again on yesterday, and now we're slowly coming back to fill the gap. However, the trend line is presenting to be a support right now. Look at that, which actually lines up the previous zone. So it makes sense we're going to bounce from here, but just remember, charts don't usually leave a gap behind. Eventually, it will be filled. There is a gap here as well, which means this is going to be filled. Okay, in between these two candles, the November 9th and November 10th. So I'm just looking back to see if we filled all the gaps on BABA. Seems like some gaps don't get filled on BABA, but this was a 3 gap scenario. 1 gap, 2 gap, 3 gaps, and then we kept running. Then we didn't give back nearly as much as bears would have liked to see to fill the second gap, but we did fill that first gap. So with that in consideration, 1, 2, we could very well just reverse right here, keep on going, or gap up, make a third gap. Not that far extended on the daily 8, decreasing bear volume, charts looking great. On the hourly, broke the hourly 8. On the 4 hour, not yet. Use the 4 hour 8 as your guide. If we break down under, 3 things. You're going to be breaking down under the 4 hour 8. You're going to be breaking down under the trend line. you're going to be breaking down under the support zone. So if you see that, especially if you see that bear volume on the triple breakdown, that's your exit. Next, Amazon. What an amazing trade on this, guys. And kudos to all of you in the trading room who follow me on this call out. This was simply an amazing trade. 2 days. That's all it took, guys. 2 days. We bought it near the bottom. Seeing this trend line bounce. Near trend line bounce. Now, the reason why, just wanted to go into a little bit detail for you guys what caused the buy. Alright. So, it was, oh, move that. 19th, yeah, this is right. It was the 19th. We saw a run following the previous day's close, the last 15-minute high bull volume. Next day we saw a run, got shut down right away. Then it sort of grinded down, and I was watching this on the 5-minute and the 15-minute. And as we grind it down to here, 3096.2. I was looking at this, 3096. We broke down under this previous support, right here. Double bottom previous support, broke down under. Did not see follow through. Start getting bought up. Next candle, we see increasing bull volume, not much price movement, but that was my confirmation. Entered here, held for 2 days, and 300% in 2 days. We did options. The chart alone, if you did commons, you would have had 8% gain. Enter near the bottom. Look at this perfect rejection off of the upper trend line and the resistance zone. This play could not have been easier, guys. Bottom to top, straight shot, 2 days. Could not have been easier. Now, I am anticipating, look at this bull volume. Now I'm anticipating a 4-hour higher low. We'll be keeping a close eye on this chart. Did not close over this internal trend line from the high of 12th to the high of the 29th. And that's October 12th to the high of 29th. Did not close over it. And if we look at the hourly, bouncing from the hourly 8 right now alongside the trend line. So kind of interesting how the daily shows under and yet the hourly shows over. Hey, anyways, we are bouncing from the hourly 8. We are still extended on the 4-hour 8 from the 4-hour 8. So expecting a higher low along the lines of a bull flag. I imagine that the downward pressure would be a little bit more aggressive than the general bull flag because of how much we've ran, how fast we have ran. We'll be looking at re-entry along right around the 4-hour 8. This is a top watch for me. And major reason, the main reason, we look at the weekly, we are still in the weekly pennant. Okay, we are still in the weekly pennant, and we have traded for 28 weeks already. How many weeks in the year? 52. We have traded sideways for over half a year on Amazon. Come on, guys, over half a year on Amazon. When this thing breaks, it's gonna go. The RSI on the weekly has cooled down from overbought in the 85s, which is a clear RSI resistance zone. You can see multiple rejections, reject, didn't touch, reject, reject, reject. So overbought from July 6th, and then bear divergence on August 24th. sideways action, long time, and now we're back near the middle of the RSI band, around 58. Actually, we were back in the middle, 52, and because of the last 2 days bounce, and we're now up at 58. But when this chart breaks, and I am anticipating it to break bull, when this chart breaks, it's gonna go. Earnings coming up February 2nd. My anticipation, after this 4-hour ADMA touch, it will be the last entry before we go. Might be a bit biased here. I mean, bear case scenario, and always try to have bear case scenarios in mind. You don't want to be so biased that you're blind to the other side of a possible scenario. Then what's going to happen if that's the case? Then you're just going to end up bag holding. So always keep both side scenarios in mind. Bear case scenario, we are going to just straight reject from here, blow through all sorts of ADMAs, increasing bear volume, coming straight back down to first thing we'd be expecting is this trend line, which now I need to extend. Let's do this. Now where did I draw this to? Somewhere there. And the potential other support would be here. For some reason, whenever I'm recording, computer is extra laggy. Any of you know why? If you do, let me know. I'm not really a techie guy. Right, so blow through all sorts of ADMAs. We could be looking at 2 supports. Actually, I think I want to keep the wedge. It's a bit more clear to see. First support being the lower trend line, now the upper trend line. Second support, the upper trend line, now the lower trend line. Likely scenario, if we were to break down after this kind of bull price action, we'll likely stall here and then come down to this confluence area. And if we do, this will be, I'll be going in heavy here and anticipating a break as we're getting pretty close to that apex after here. Alright guys? Next, zoom. Are we seeing a reversal today? We are seeing a big lower wick from the daily 8. I believe also from the 4. Nope. Nope. Okay. So from the daily 8, decreasing bear volume, lack of sellers. I like the hourly chart a lot better. Been staring at this one the whole day. Anticipated a correction to the 0.5 fib, but chart is a lot stronger than anticipated. We are bouncing from the 0.382 instead, which, notice today, actually lines up with this trend line from this high of December 12th open, December 21st open, to the high of January 14th, 8:30. So we are bouncing from here and never closed under the 0.382. Seeing a reversal from here on somewhat sustained but still low bull volume. I have re-entered the trade, not on full size, until confirmation of break of the new highs above 400. Looking very good on Zoom. Ultimately, price action, if you look at the daily, running from a low here to the high here to the higher low here. Oh yeah, you guys can't see my cursors. So low here, high over here, to the higher low over here. That would bring us 1-to-1 extension target 690. So ultimate target, I'm looking up ideally around 900. considering Zoom, how it's not exactly like any innovative technology. Minimum I'm expecting, very minimum I'm expecting, is the GP at 490. Ideally, I want to see at least 690, but lots of upside regardless. Right, from here we're gonna go into 5 ticker requests. First one, FSLY. So I've changed it up a little bit, guys, and if you are still with me, hopefully you are still with me, you will know why and what the change is. So we're going to change from 2 videos to 1 video for now, as spending 2.5-3 hours a day in front of a computer making 2 videos over roughly 30 tickers per day is just not really sustainable or the best use of my time, because I'd rather be researching tickers and just bringing to you guys what the most top watch tickers are, or if there's special requested tickers. So from now, I'm just gonna, for now, for over at least the next week or 2, we'll just be coming out with 1 video. I know it's gonna drop the views quite a bit, but I'd rather present you guys with quality content instead of quantity. So let's give it a try, see how it goes. Hopefully you guys still find the contents that you're looking for. If not, feel free to shoot me a message or send me a, I don't know if you can shoot me a message, put it in the comment, and I read all the comments that's left here. So thanks for watching, guys. Anyways, first ticker requested, FSLY. Nice bull volume showing up, gap up, indecision candle. Still can't make it over this resistance zone here. Does that line up with previous? Not really. Yeah. So it's not even a key resistance zone. We're having trouble getting over it. Especially considering how bull the market is today. On the hourly looks nice. We are forming an hourly bull flag. And we can see the last hourly bull flag we formed. We just gapped up after. No reason for exits yet. No substantial bear volume, no bear divergences. Nothing, no reason for you to exit yet. Just need to ideally get over this this resistance tomorrow. First thing tomorrow. Given the market condition right now, however, due to the pullback in the market right now, might prove to be hard. If you do notice relative strength in this ticker, stick to your trade. Oh yeah, so guys, always try to note the relative strength or relative weakness versus markets. If you're seeing your ticker that's going sideways while the market is going trending downwards, when the market reverses and go up, you can expect your ticker to go up even further. Same vice versa, but relative weakness. Note it in the first 30 or 15 minute, 30 minute hour chart. Look for that volume. All right, second ticker. Oh, earnings on this name is coming up. Not for some 20 some 30 days. February 17th. Very slight. Nope, no bear divergence. Bed Bath and Beyond. Keeping this one on the videos for you, Rafaela. I know you're still in it. Look at that follow through. We called it, hey. Bull flag. 3 days. Decreasing bear volume. Boom. New highs. Little bit of a cause for concern because of this upper wick and lack of bull volume. A little bit of cause for concern. Yeah. Unable to close over previous high, hey? So keep your eyes very glued to this chart tomorrow if you're in the trade. I would be a little bit concerned after this decreasing bear volume and a break on bull volume, even though not significant. But we saw a big upper wick, lack of follow through, followed by bears shutting it back down, although lower bear volume. So a little bit concerning. Nothing major for you to exit yet. Use the 4-hour 8 as your guide. See guys, if you use the 4-hour 8 as we mentioned back here, you wouldn't have exited here because it didn't close under. Close somewhere right on that low volume. You wouldn't have, if you knew what you're doing, you wouldn't have exited. No exit, still closed above it. And now if you're still sticking to your 4-hour 8, instead of getting stopped out at 24.69 now, your stop now should be at 25.71, which is a whole dollar difference. Even if you in for 100 shares, that's a $100 difference, right? So use the 4-hour 8 and watch the bear volume. If it starts increasing and we break under the 4-hour 8 with a close under it, that's your exit signal. Next, FUBO. Loving this chart. Look at this follow through. Does it not remind you of Bed Bath & Beyond just now? Nice bounce, or lack of bounce back here, sideways. Nice bounce on nice bull volume, followed by a little bit of shutting down, decreasing bear volume. Then now we're seeing increase, a pop with minimal upper wick. So I have added to this trade, looking at the GP now. We rejected from a 0.382. We held up very decently on low bear volume, lack of sellers after all these selling. Now I am looking up at the GP from the high here on this candle to the low here on this candle. GP is around, well, I guess first thing is the gap fill, which is 42.82. Then looking up at the GP, 47.35 to 48.60. Top trade. One of the top watches for me. Next, Twitter. Another top watch, but a little bit more disappointing. Similar idea to Amazon. Same day trade actually. Same day call out. We enter right at the bottom. Not to the penny, but right at the bottom. If we look at the long-term chart, there's a trend line that's been going from March, the low of pandemic, to bounce June 26. Nearly touched. And we touched on, what's the 19th? Tuesday. We touched on the Tuesday. Same idea. I was looking at this in a zoomed in chart. Was thinking, okay, we might break under it. And we're likely to break under it. You know, decreasing bear volume, but not substantially low enough yet. So coming here, didn't enter on the trend line. Actually, no, that's a lie. I entered the first trade on the trend line, broke down under, and second trade around 44.5, I believe it was, expecting a bounce. From there, started seeing a lower wick form, bounce, and then been in the trade. Same 300% trade in 2 days. Amazon, Twitter, congrats to all those who have followed me on the trade. Congrats to the community. Go total control traders. All right. Now, this one's a little bit different because we are still rejecting from the 88. That's a little bit more disappointing. With this kind of bounce, on decreasing bear volume, problem was there was also a lack of bull volume. So we're rejecting from the 88, anticipate a higher low on the 4-hour. Holding the 4-hour 8. Let's see. Why is there so many lines? Oh yeah, that's the other thing. Trend line, support zone, GP. This is what I call golden setup. Trend line, support zone, GP. Triple confluence. Anything with triple confluence, definitely getting in. Golden setup, don't want to miss it. So as we broke down under the trend line, just add it to the trade. Anyways, let's see on this, where can we expect a pullback? Makes sense. We could form a double bottom right at the 0.382, strongest case scenario. That would still be considered a bull flag on, what would it be, 4 hours? Yeah, if you form a double bottom and bounce straight from the 0.382 and wick off of it, still a bull flag. But chart is a little bit weaker than the other names. High potential though. Look at this. We bounced last time we came close to the the trend line. Same idea. Rejected from the daily 8, then came down to, actually this might be a good reference. Came down to near the GP, then sideways a little bit, started going again. So from there, this was 9 trading days. Let's keep an eye out for that. See if we go sideways for 9 trading days before the next leg up. This is a nice bull flag. Anyways, last bounce resulted in 44%. The retracement resulted in 20.87%. If we were to look back at 44% extension, does it line up with this fib extension target of 1-to-1? Let's see. 44%. 44 above it. So fib extension 1-to-1 makes sense. You're looking at minimum price target of $60. Similar to the, I can't remember which chart it was that we talked about, but before the 1-to-1 extension, there's a gap fill target first, 50.19, followed by the GP, then 1-to-1 extension. Ultimate target 61.58. As long as the market doesn't have a huge correction, of course. Last but not least, Ozone. I believe this is the Amazon of Europe. So Jamia is Amazon of Africa. This one is Amazon of Europe. And I think there's 1 or 2 other Amazons aside from the actual Amazon. But yeah, seems like Amazon's everywhere now. IPO, not too long ago, November 24th, extremely bullish. Let's see if we reach that 1-to-1 extension. Low to the high, to the higher low. 1-to-1 extension has been reached. We're bouncing from it. Chart's extremely strong. A little bit of bear volume, unable to push it down. We are seeing upper wicks, triple upper wick. Triple upper wick. If you're in the trade, RDA is no longer valid. If you're in the trade, use the 4-hour 8 as your guide. Now this is an interesting candle this morning. Huge bear volume on the 4-hour. What does RD look like? Unable to push it up. Okay, so it's actually bull volume, right? So if you notice, huge volume, whether it's bull or bear, minimum price action, go to a shorter time frame, see if it's actually bull or bear. Still minimum price action, go to another shorter time frame. Nothing happened. Even less price action. Okay. So it's actually bear. Yeah. It's actually bear volume. Something happened at 8:54. Again, this might be because I'm not paying the data pack. So I wouldn't really trust it. But forming a bull flag on the 4 hours. Use the 4-hour 8 as your guide. Right, and that's it for tonight. I hope you guys enjoyed the video. If you're looking to get out of debt or build that first pot of gold, make sure to hit the like and subscribe button in order to get updates on our new videos. Also check out our website at totalcontroltraders.com. There will be a first giveaway for 7-day free trial to our trading chat room with live updates on tickers, as well as coaching and mentoring, individual and group. Thanks for watching, guys. I hope you stay safe and be in control. I will see you in the next video. Thanks, guys.